Hi, Spring Cuts Forth Realty Group. Hey, I want to chat with you a little bit about this whole release from making your mortgage payment for 90 days, no late charges, and no credit reporting. You guys have probably seen that. I did a little research. There's a news article from New York Times. There's one in the USA Today talking about all the big mortgage companies and how they're allowing you this 90-day grace period. I'm going to talk really quickly. I started getting calls from my past clients. I'm a realtor in Portland, Oregon. Started getting a bunch of calls saying, hey, how does this work? How does this apply? So I immediately got on the phones today. My first call was to Wells Fargo, because usually when it sounds too good to be true, it is, but I thought I'd figure out what's really going on and what the process is so I could educate my clients. So here's what I found out. So pretty much what they're saying is that if you have a mortgage, you don't have to make a payment for 90 days. And that payment, basically, they will not charge you any late charges. They will continue to charge you interest. And they say there will be no credit reporting, or the credit reporting will be suppressed. And so here's the thing. What they're not telling you is that on the 91st day, all of the funds are due in full. Okay, that's the first part. The second part, when I talked to Bank of America today, what they said is what they're reporting on your credit report is no activity. So lenders, you guys know what that means as well as I do. That is a direct hit to your credit report. Luckily, the gal at Bank of America I spoke with said, we are telling consumers, if you think you're going to refinance or purchase or something in the near future, this is going to impact your ability to do that. So I thought that was really gracious of her. So here's what we need to understand. The only loans that those apply to that you cannot make a payment for 90 days are the loans that those lenders have in-house, meaning Bank of America, if they did your mortgage and they're holding your mortgage and they are servicing your mortgage and you make your payment every month to Bank of America, you automatically qualify for that 90 days. Okay? This does not apply to the average homeowner. They don't hold a bunch of houses. The whole point is to sell the mortgages on the back end. So same with Wells Fargo, same thing. If your mortgage is directly with them, this applies to you and you qualify. So now let's just fast forward this, okay? So if you're going to take that option, be aware your credit will be hit, okay? So let's now say it's the 91st day and for whatever reason you couldn't make your mortgage payments. So now on the 91st day, your payment is due in full. So Susie, April 1st, April, May, June does not make her $2,000 a month payment. On July 1st, she has the 3 months she missed, $6,000, plus her current payment of $2,000 that's due July 1st. She has a total of $8,000 due July 1st. And on July 1st, the bank starts charging them late fees, and they start credit reporting, meaning that on the 91st day, you are going to now have a 90-day late on your mortgage. Lenders, you guys know what that means. Nobody's going to be able to get a loan. That's where it starts really impacting the consumer's credit report or their credit score. So let's just say you find yourself in that person's shoes. We're going to call her Susie. So Susie didn't make her payment for 3 months. It's now July 1st. She doesn't have $8,000. So her next step is to call the home preservation department and complete a workout package. A workout package, does this sound familiar, guys? It's very similar to what we did in the short sale days. They're going to ask you for a bunch of personal information. They're going to collect W-2s, tax returns, bank statements, IRA account, all of this information on you. You'll submit it to them, and then they will send it to an underwriter who will review that. All the time, what they're looking for is they are trying to evaluate your ability to repay this loan. So now there's something that the lenders do. We're in Oregon and we became a judicial state through this whole process back in 2007. What that means is that the lender has to go before, on these particular loans, the lender has to go before a judge and actually in that county go in and say, I'm entitled to this amount, this mortgage, and the judge then stamps them, giving them permission to foreclose at some point in the future. What happens is that lenders, once a consumer gets behind, files that, because that way at any point in the future they can go ahead and file for foreclosure if in fact they don't think they're going to be able to work it out with you. It was interesting, talked to Bank of America and Wells Fargo today, and I said, so are you going to be filing those? They said, well, we can't say, but it would seem practical that we would, because we would want to protect our asset. Of course they would, right? So now let's just say we're 120 days into this. We went from 90. We've now submitted our documents for our workout, and we're waiting for a response. It's been an additional 30 days. So now you've got a credit hit. Now your credit score you worked so hard for, that was 725 or 750, is now 580. And then what's worse is your income. If you're W-2, and let's say that you get laid off, but you're fortunate enough to get unemployment during the period, you may get 50 or 60% of your income, let's say. Or if you're 1099 employee, like all of us, realtors or hairdressers or contractors, that type of thing, you don't get unemployment. And so you had no income during that period. So all of that reduces the amount that you qualify for. Remember, this workout package, they're trying to figure out what is your ability to repay the mortgage. So the mortgage company will then come back there. They could offer you a loan modification, a repayment plan, or a forbearance. And I will just tell you, in my prior experience in 07, 08, all of that, very, very few loan modifications were ever went through. I know I helped my customers, some of them for months, some of them actually for years, trying to get them to go through. If you're lucky enough to get them to go through, I remember a case where, my customer was like, I can afford $2,000 a month. That's all I can afford. That's what my house payment was before this debacle. It's what I can afford. And the lender came back and said, nope, based on our numbers, we think you can pay $2,600. So you either pay that or we'll just foreclose. So this is where it starts to get really, really dicey. The other thing is that if unfortunately you're not back to work yet and you're still unemployed, you can't even apply for a modification, because again, it's about evaluating your ability to repay the loan, and you can't if you don't have your job. So at that point, if they come back with a ridiculous loan modification, either a high interest rate, we saw a lot of that back in the day, because now you're higher risk because your score is down, you don't have enough income. Our alternative then is to unfortunately sell your home as a short sale. Hopefully it's not short, but to sell your home and get you out from underneath the mortgage. Or it's an unfortunate situation. So here's the thing, is that lenders must follow the FHA, VA, Fannie Mae, Freddie Mac guidelines. They set the guidelines that all these lenders have to follow. And I have to believe in my heart of hearts that after that 2007 to 2013 time period, there were a lot of mistakes made. We had never dealt with anything quite severe like that. I have to believe in my heart of hearts that these guys learned lessons. They learned what worked and what didn't work. And I can only hope and pray that they will implement some type of program or guidelines that will somehow accommodate consumers. So that's the information. What I requested both of Bank of America and Wells Fargo was really transparency, because that's what was so needed in 2007, 2008. And that what they should be advertising is that, okay, we're going to allow you not to pay your mortgage, and there's no late fees and no credit reporting, but what they better tell you is that the balance is due in full on the 91st day, and that's only if we hold your mortgage, right? That if we hold your mortgage, you're entitled to this 90-day. If not, you're not entitled to it. So guys, we've got to get out there and educate the consumers. I was talking to Bank of America and I said, consumers don't understand. She goes, oh yeah, they're calling us. Believe me, I was on hold for an hour and a half. I said, well, I get they're calling you, but they don't even know what to ask. They don't even understand what you're explaining to them. This is complicated stuff, guys. I did over 1,000 short sales in this 2007 to 2012 or 13 period, and there is a lot of moving pieces, as a lot of you know. So I think it's a real opportunity to get out there and educate people. And really, I'm available. Anything I can provide, I will probably do some webinars next week just because of the need for it. Sorry, this is a little longer than what I was hoping it would be. Certainly feel free to reach out, message me. I'll help any way I can, and I will post some more next week. But let's get the word out. This could be disastrous for customers and for the U.S. So thanks for tuning in. Again, Spring Cuts Forth Realty Group, Portland, Oregon. Have a fantastic weekend. Stay well and wash your hands.